We found an unusual trade on Nvidia stock, ticker symbol NVDA, worth $252 million on the last trading day, August 30th. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are now trading Nvidia stock. Are they bullish and buying because they think the stock will go up? Or are they bearish and selling because they think the stock will go down? And then after our data analysis, we will discuss our trading strategy based on this wealthy investor's $252 million trade. Because as we all know, the rich have more resources to do more research, to access more information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. So without further ado, let's dive into the data as usual. As we can see here on the options time and sales tape, on the last trading day, August 30th, there were 100,000 contracts and 64,000 and 62,000 being traded all at the same time, 10:25 at the 35-second mark for the September 20 options at the 105 strike calls, and the December 20 options at the 110 strike calls. Now notice that the 64,000 and the 62,000 are for the same options at the 110 strike calls expiring December 20. So we can add both of these contracts together because they are the same option. And so adding 64,000 plus 62,000, we get a total number of 126,000 contracts. So now let's take a deeper look at the option chain to find out more on what this wealthy investor is doing by trading these options. So at the September 20 options, we can see at the 105 strike calls, there were 122,620 contracts that were previously opened before the 100,000 unusual options were being traded at the volume. And so because the open interest is greater than the volume being traded, based on our analysis, these options were closing out and rolling to a higher strike price and a further date out to the December 20 options at the 110 strike calls. The 126,000 contracts of unusual options that we added up previously is greater than the open interest of 48,271. And so we know that these December 20 options at the 110 strike calls are opening trades. And now that we know that these are the opening trades and the September 20 options are the closing trades, we can now calculate the total trade cost. So we have an options price of 20, but since one option represents 100 shares of stock, we multiply by 100 to get $2,000 per contract. And since 64,000 contracts plus 62,000 contracts is equal to 126,000 contracts, we multiply that out to get a total trade cost of $252 million. But keep in mind, even though this trade is $252 million, we are cautious cautious on Nvidia stock and hedging our trade because there's actually more data that we will show later in this video that makes this trade higher risk in comparison to the trades that we share with our membership. So if you want lower risk and higher chance of profit trades, then make sure to go to our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
Now, is this wealthy investor going long bullish or going short bearish? Well, based on our deeper analysis with more data on this trade at the 110 strike calls expiring on December 20, we believe this wealthy investor is buying these call options to open. And as we just calculated, they were buying them for $2,000 each. And when we analyze this trade on the risk profile profit loss graph, we can see as the share price goes up, these options become more positive, meaning more profits. The x-axis on this graph represents the share price of Nvidia stock, and the y-axis represents profit. Note the zero break-even line, and below that is a loss. And so when the lines are below that break-even line, you can see that it becomes more negative, meaning a loss, potentially losing all $2,000 if it crashes down. And so that is the risk on this trade. And we can see on the Greeks, the delta of this trade is a positive delta, meaning this is a long bullish trade. If it was a bearish short trade, it would be a negative delta. But keep in mind, even though this is a long bullish trade, we are still cautious on Nvidia stock and hedging our trade because this wealthy investor has not been profitable yet, which raises a red flag for us. So how do we know this investor is still at a loss? Well, we can analyze the past performance data on their previous trade that they closed to roll out of, the September 20 options at the 105 strike calls. As you can see, on May 30th, when Nvidia was trading at $1,148 per share before the stock split 10-for-1 in June, it was on this day that this wealthy investor opened this trade for the September 20 options at the 105 strike calls. So at the strike price of $1,050, which is really the same 105 strike price, because we need to remember to divide by 10 since the stock split 10-for-1. We can see the volume being traded, 29,159 contracts, which is really 290,159 contracts since we multiply by 10 after the stock split. But what's most important to note is that the 1,358 open interest is much less than the volume. So we can confirm these were in fact new trades being opened on May 30th. And notice the price they were paying for these call options back then, 189.50. But again, we have to divide by 10 because of the stock split, which is basically moving the decimal to the left and removing the last digit. So they paid 18.95. And if you look at the price they closed these September 20 options at when they rolled the options, you can see here 15.70, which is less than what they originally paid at 18.95. So we know this trade is a loss and this wealthy investor is not profitable yet. And that is why, even though this trade is long bullish and worth $252 million, it still carries a level of uncertainty that translates to a higher risk, lower chance of profit trade in comparison to the trades that we share with our membership. And that is why we are still cautious on Nvidia and still using these options to hedge our shares in Nvidia stock. We actually published this hedging strategy in this video on July 5th when Nvidia stock was higher. So it's been a good strategy so far to help us minimize losses since the stock is lower now. We will put a link at the top if you missed it. Make sure to subscribe to our channel so you don't miss out on these strategies to increase profits. Let us know in the comments below, are you bearish or bullish on Nvidia stock like how this wealthy investor is? And go to our website if you want to get better trades with a higher chance of profit than this one. And make sure to watch our July 5th video to learn our no worry strategy to hedge Nvidia stock. As usual, please smash the like button, take care, and have a wonderful day.